Welcome, everybody, to the results of the July 2024 edition of the Canadian Farmer Sentiment Index. I'm Shaun Haney, and I'm joined by Justin Funk, both of us of RealAgristudies. Really appreciate everybody that completed this month's survey. Really important information that comes out of this, and it's only possible based on the fact that you're willing to give us a few minutes of your time to complete these surveys that come out on a quarterly basis. This is really the insight and the truth behind what you're dealing with in your farm business. We're looking at financial performance, willingness to invest, talking about the markets, as well as even a question about mental health. And a lot of times people will say, well, this is what farmers think. And you know what, quite honestly, they maybe have talked to one or two people and they made that reference. This allows us to actually know what farmers think about a number of different issues that they are dealing with in their farm business. There's a lot of issues to deal with as we get to the back end of summer. So, Justin, let's take a deep dive here into the July 2024 results.
Yeah, you bet. So yeah, thanks again for everybody completing this. I know it's a busy time of year, a lot of field activities, maybe, hopefully taking some time for yourself as well. We're going to jump right into the results, but for those of you who are new to this, some of you've seen this, 3 or 4 or 5 times now. But for those of you who are new, just to give you a little idea of how we actually get to the numbers that we're going to be sharing. So one of the questions that we ask you every time is around your farm's financial performance today relative to a year ago. And so these are actual results that we collected that show how we get to the index number. So in this case, you were given an option to select, well, we're better off, we're worse off, or we're about the same. So what we do is we take the positive, which is better off, and then we subtract the negative, which is worse off. And what that does is that leaves us now with the differential. In this case, it's negative 16. We add that to 100, and now that gives our index number of 84. So in this case, the index for current farm financial performance number is 84. So following that logic, let's now go to the actual index itself. So when we're interpreting these results, we start by taking a look at this line at 100, which is what we call the neutral line. So anything that falls above this line would be a positive sentiment. Anything that falls below this line would be a negative sentiment. So in looking at what we just did with the current farm financial performance index, well, this is showing the results going back to July of 2023. So this is now a year's worth of index reports that we've done. And you can see that there is a bit of a downward trend there, going from 96 a year ago down to 85 in April. Now, when we take a look at our most recent results, just a slight notch down at 84, which really suggests that within a margin of error, the sentiment on current farm financial performance has not changed.
And I'm surprised. If you would have said, "Hey, Shaun, which way are we betting?" Yes, it's dropped by 1 point, as you had indicated. But if you think back to April to July and what has happened in the overall markets and how input costs have not dropped to the significance that some of the commodity markets have, I wouldn't have been shocked if this had a 7 or maybe even a 6 in front of it, based on what I've heard from a lot of people. Maybe the crop yields are keeping people's optimism a little bit higher. But this is a good thing. It's not a bad thing. But I would have thought we would have dove a little bit lower based on what's happened out there.
Yeah. Well, there are a couple differences that we observe. I mean, first of all, primary livestock producers tend to be a little bit more positive. They're actually above the neutral line relative to those that are growing crops. And we also see a little bit of geographical difference here. Perhaps that's influenced by farm size to a degree, but we find that Western farmers carry more positive sentiment than Eastern farmers. It's not a huge difference, but it is one that we're capable of observing for sure.
Yeah, and remember, this is current farm financial performance compared to 12 months ago, right? So, and I think there's a lot of concern about the start that some of the corn in Ontario got off to at the beginning of the year. A lot of people saying average-ish in terms of how that corn launched to the ground. That could definitely be a bit of a factor. And there's been some crazy amount of moisture in some areas as well. So there's been a little bit of adversity during the growing season, which may be that may be creating some of those reflections in people in Ontario compared to last year.
Yeah. So the next question that we ask is around your future farm's financial performance. So asking people to anticipate, do you think you're going to be better off, worse off, or about the same a year from now? And as you can see, the historical average here has been in around that, 86 mark. That 67 in January was a bit of an outlier. I think we've observed we have never been in the positive territory since we started doing this in September of 2022. So I think our anticipation is it will likely always be negative. I mean, I say that with caution, but when we look at July of 24, here we are pretty much exactly where we were out a year ago, which is interesting because a year ago the question was related to a year from now. So here we are a year from now, where we're at. And so what have we seen? Just a slight reduction, just inside that margin of error. So I mean, I wouldn't take this super seriously, but it is a bit of a decline on the future side of it. And very similar trends that we see with farm size, geography, larger Western farms, a little bit more positive than Eastern farms, and well, the livestock also seems to be a little more positive.
Yeah, and if we think about the timing of the survey here was the third week of July,
Yeah,
correct?
correct.
Okay. So, and that's I asked that because it's important from a Western Canadian perspective because of course in the back end of July we really saw that temperature, that heat turned up, the moisture really eluded a good part of for sure Saskatchewan and Alberta. People's expectations of what the crop could be compared to 6 weeks prior was definitely dialed back somewhat. People are getting into their pulse crops now and trying to figure out, okay, what do I have relative to the expectations today versus 6 months ago, or sorry, 6 weeks ago, and you don't want to think about the 6 weeks ago in some cases. So really now we're sitting at this, across Canada and even between current and future. And you'd point out livestock is feeling more positive about how things are looking. That's all to do with the feed costs. Let's be honest, right? Especially from a beef perspective, prices are relatively still high, and feed costs have come down. And so that's created the financial opportunity for them. When we think about crop farmers and the market coming back, it's a bad thing for livestock producers. They're buying that corn and that wheat and that barley to feed their animals. So they're going to feel a little bit more optimistic about their finances here at this time. And of course, like you said, size being a little bit of a factor here. Larger farms feeling a little bit better, right, about their financial performance relative to some of the others.
Yeah, even the largest farms are venturing into the positive territory in some cases. So
Yeah.
yeah. Now, the next questions really focus on the industry. While the first two are more about the farm, now we're looking at the ag economy. And here it's, do you think that we're going to have good times or bad times? And you can see here the trend has been, pretty negative on that one, going back a year from now. Again, with a bit of a blip in January, but sort of coming back more to the norm in April. Where we are today, a little bit of a decrease, not much, but now we start looking at this as being outside of the margin of error, and so I think this is something that we need to look at. Now, before we comment on that, I just want to jump ahead here. The next one, see, this is the next 12 months, the ag economy. The one after this, the ag industry outlook is more the longer term, like in the next, few years, what you think we're going to have widespread good times or widespread bad times. And this one was interesting because you can see that it follows a very similar trend line to the economy, but in April, we took a bump up, still negative to 81, and we wondered at the time, like, is this another blip? I guess this kind of validates that maybe it isn't. The longer term outlook seems to be improving, and it has stayed the same over the past now two times that we've done the study. So take that for what it's worth. Very similar trends too that we see with the types of farms. Larger farms are more optimistic, as are those with livestock. So the livestock trend continues in this particular case.
Yeah, and it's great to see that we've bounced in terms of how people feel about the next 12 months, how people feel about the next 60 months. It's great to see that we've bounced off of those lows, right? When we were at 44 in terms of what the next 12 months looked like, it felt like we were being very, very negative, right? In January. And if you look at the next 5 years or the next 60 months, we've held that 81, which, we're still negative. Okay. and I want to see this number in the positive because and I think truly that it's not out of the realm of possibility. But you think 5 years is a long time. And so when we were, in January when we were at 56, that just felt like we were really being negative. Maybe it was the timing of the survey. Timing is important in any walk of life. So I'm glad that we've held at 81, and hopefully when we do this in 3 months again, we are, maybe we've even got a little bit closer to that neutral line.
Yeah, yeah, you bet. Well,
In 5 years is post-election, Canadian election too. Maybe this is people thinking, you know what, we're going to have an election in the next 5 years, but it's going to be in the next 14 months for sure. Maybe this is them. Maybe that's a part of it. I'm not sure.
in at the end of every survey, we do have a comment box where people are able to add some thoughts, and I always enjoy reading through those. I know you do as well, but often the tone is there's anticipation for an election coming up.
Yeah,
We'll just put it that way.
yeah,
So you kind of talk about what's driving this. There's sort of proof in this is the attitude, this is the way people think, right? And it's based on the set of circumstances that we're faced with. The next question is more related now to what people will do. And we ask the question, is now a good time to make investments in the farm? Good time or bad time? And this one I found to be particularly interesting. It's not dramatic, but you can see here that for July, October, and January, all sort of in that low 50 mark, right? And we saw that even previous to that. That number did not change a whole lot. But then we saw in April it bump up to 58. And the timing of that coincided with a change to the interest rates. Well, we've seen another change to the interest rate since then, and we've seen this number jump up another 5 points. And so I look at this and I wonder, like, are we on an upwards trend here? It appears to be that we are. I mean, it's still in the negative. One point, though, that I want to make is that the larger farms are looking at this with a much more positive, optimistic viewpoint. So now is a good time. Like we're venturing close to the neutral, if not even the positive in some cases there. Also, younger farmers seem to be more apt to want to make or willing to make investments in the farm. Now, there could be some other social reasons that, I mean, young getting things started, now's a good time, sure, as opposed to I'm in the middle of my career. Maybe I can wait a little longer. I don't know the rationale
sure.
behind it, but we are seeing that trend and have over the past few studies.
Yeah, and interest rates, that's something that's changed here. If you look back to April, we've had, when this survey was done in the back end of July, we had a 25 basis point reduction. We've since had another one. Okay, so now we're in a downward trend now when it comes to the Bank of Canada and the key lending rate. So that's going to be a factor in terms of willingness to make investments. One of the things we don't know here, of course, we're talking about farm size and age and things like that. One of the things that we don't know that you got to remember in a kind of a downward cycle as it is right now in agriculture based on commodity markets is it can also be an opportunity. So, if you've got a strong balance sheet, really good free cash flow, this is a time where you can pick away. Maybe, somebody else's pain is somebody else's fortune. And I was reminded of that by Jim Minter from Purdue one time in an interview right at the beginning of COVID, where I said, "Oh, this is like dark days," and oh my goodness, he's like, "Sean, this can be opportunity as well." Right. And so that there may be an element of that happening here for some of the farms that feel more positive in terms of this is a good time to make farm investments is because they do have strong balance sheets. Now, I don't have that information. I'm speculating there, but that's what came to mind as I saw us jump into the sixes here.
Yeah, yeah, good, fair observation. Well, a lot of this is also due to how the markets are performing. And so we asked the question about confidence in grain marketing. And here we have seen, a bit of a roller coaster. In this particular study, we found that the number decreased, but only marginally. I mean, not enough that I would get too excited about. And this is, I think, somewhat related then to the outlook on selling crops, where we ask people, should you be holding your crops because you feel prices are going up, or should you be selling because you feel they're going down? And we realize that those are very, general question answers, right? There's probably a lot more to it than that, but just the general sense, how are you feeling about that trend? What we see here, again, roller coaster, but you see the sharp decline from a year ago, then a bump up again in April, and then just a slight reduction. I mean, outside the margin of error. So this is something that we look at and say that there is a decrease, but it's not a dramatic decrease like what we have
Yeah.
seen in some of the previous studies.
This is farmers saying they believe the market's been oversold, right? So they're essentially saying the market goes higher from here, and that has been a struggle for this market. Where we seem to be still trying to test the bottoms. It's been a real issue in wheat. It's definitely been an issue in corn. And that's been a real factor here. So, and we got some data showing, there's some people still trying to deal with some of their 23 crop, never mind where they are on the 24 crop. But this has been, I think you said roller coaster. That is probably even an understatement. It has been the most volatile, craziest black diamond roller coaster you ever could imagine in terms of farmers trying to steer through this environment. And we've seen the confidence in marketing the crops below that neutral line, totally understandable, right? And the most volatility that we have had is in this outlook on selling crops and trying to steer through that. Again, though, I am a little bit surprised on this one and relative to the first two when it comes to farm financial performance. Based on anecdotally, and this is why it's important we do this. Anecdotally, I have heard much more negativity than what these numbers are presenting to us. And so I think it's a validation of what we're trying to do here, trying to put some quantitative data and wrap it around some of these perspectives, because this feels more optimistic than I have been hearing from growers.
And keep in mind, we have 541 farmers completing this survey. So that
Not a
is
small sample.
not a small sample, statistically significant.
Yep.
So I think we have to pay attention.
Now,
Um,
does it mean the market is going higher from here? Not necessarily, right? So this is farmers going to have to really have good strategies, try to get that confidence up in terms of their marketing and their risk management plan to try to deal with whatever is in front of us from a marketing perspective, because it's this volatility is going to continue.
we asked a few spin-off questions after the questions on marketing. By the way, we also asked this question for livestock farmers. We asked, do you have livestock? You say yes. We go to a separate set of questions. Um, uh, Extreme positivity on livestock margins on
Yeah,
that
well,
one.
yeah,
Just yeah, like
that's
like
the that
170, like it's a big number.
that's the feed costs, right? There we've seen corn still searching for its resistance point on the bottom side of all of this. On you look at that December future, you can see it. It speaks to you in terms of corn trying to find it, and that's good for livestock farmers. So naturally, so that 170 validates what's actually happening out there.
Um, Here are a few side questions that we ask. We want to just get a sense as to where people were with their inventory. So, approximately what percent of your 2023 or old crop do you still have left unsold? You can see here that now I'm not quite sure how this stacks up to what we've asked in the past, because I do think we asked this question maybe a year ago, but there's not a whole lot of crop left. It doesn't appear to be.
It's the issue here is okay. So and this is great, and this is again timing, third week of July. Okay, everybody. So we've been hearing a lot about there being crops still out in the countryside. Okay. This is an issue because you only have so much storage. And we've asked about storage in the past, but you only have so much storage, and there's a new crop that is coming. Okay. The other part of this is we've been talking about the markets here quite a bit. All of this crop that is here, whether it's 1% all the way to more than 40%, is worth a lot less today than it was 6, 9 months ago.
Hmm.
And so that's the part that hurts. It connects to that current and future farm financial performance, right? And if you're still holding it, you're probably in that camp that thinks the market's going higher from here, and you hopefully be able to negate some of your downside risk.
Yeah. We could look at that, by the way. That's one of
Yeah.
that's a nice thing about having the data. We can slice and dice how we'd like.
A story, something we'll talk about here in the coming weeks, and we'll
Yeah.
definitely get a story up on realagriculture.com.
Just one more on the marketing piece. We asked, how would you rate the pace of your 2024 crop sales? Is it behind previous years, ahead of previous years, or on pace? And you can see that it's either behind or on pace. So I'm really not an expert in this, so I don't know what to take from that. You would probably have some thoughts on it, but that's how the distribution of those responses came out.
I'm putting you on the spot here. Do you have any sense of East versus West on this question?
I don't, but I will look at that.
Okay,
Yeah.
something else we'll definitely have a write we'll definitely write about. And this relates back. There's several factors here. For the Western Canadian farmer, there's this hangover from 2021 where people got caught, right? So when you talk about being behind previous years, I guess one of the questions there is how far back are you comparing yourself to? But that's self-determined. We're still behind, right? So I think a lot of things have changed here for the Western Canadian grower and trying to get past the hangover from 21 where people got caught out in the open and had to pay some penalties because of the drought situation. Even though there was a crop out there in the fields, people still being hesitant until they get the combines out, right or wrong. I think that is definitely a big factor. The other part is the market's been on the downward slide, right? And so you get to a certain point where it's like, well, I don't want to sell for this. Hopefully, it gets back to where it was, and I don't want to sell for this. And then the market trend continues to trend lower, and that's where regret and things like that start to creep in here. So there's a huge mental component of trying to steer through this marketing season here for sure.
Uh, we also took this opportunity to ask a little bit about people's concern over the impending rail strike. And I know there's been some developments on that front since we asked the question, but the question was fairly straightforward. Which of the following best describes your overall level of concern regarding the impending rail strike? And, I think the takeaway here is that there is concern, and probably rightfully so, which is compounded when you look at it now and say, well, what impact might this have on your marketing activities? And we can see that there's, potentially quite a bit of impact. And I don't think that this surprises you or I at all, but it now does put some, numbers behind people's level of concern.
Yeah, I think based on this again, third week of July. Okay, so as of the end of last week, it looks like August 22nd is the date. The CRIB report came out the end of last week, and so there's going to be the railways have said there's going to be a lockout of employees. There's a 3 week cooling off period here, but a strike looks highly probable at this point as the two sides are still very far apart. We're talking about both major railways in Canada being entirely shut down. If you can imagine, that has agricultural impacts. It also has Canadian economic impacts across many industries. So, I guess if you're may or may not be concerned, or not very concerned, or not concerned at all, maybe you don't think the strike's going to actually happen. Not the fact as far as the impact of a strike, but maybe you just don't think it's going to happen, because I think if it does happen, you should be concerned. That's my personal editorial opinion when I look at the numbers. And if you look at what impact do you feel an impending rail strike would have on your marketing activities, if you're in the little impact zone, maybe you're not marketing off the combine, right? Who this really hurts is the farmer that maybe doesn't have storage, the farmer that really needs the cash flow off the combine. Maybe you sell your pulses right off the combine to create some cash flow so you can maybe buy some of that fall fertilizer. Cash flow people, it's really going to impact, because the longer that strike goes, the more grain doesn't move, the higher the probability that you don't get paid and that crop has to sit on your farm. So if you are an off the combine seller for a portion of that 24 crop, you're in the significant impact category. So I think there's a lot of cross comparisons that we can do looking at this answer on the right versus people how they're feeling about some of their financial performance, because there's a lot of tie in here. This is going to have major impact if it happens, and the longer that it were to go. Like we're talking, this is unprecedented. We've never had where both railways have been on strike at the same time. No grain's going to move. So it's going to be a big problem. So I appreciate everybody. I think this tells a big story here, and appreciate everybody filling out these questions. Again, exactly why we're doing this.
The last question here that we are going to talk about is the mental health question. So of course we want to pay as much attention to this as we do financial health, if not more. So going back just to July of 23, and really I could go back to September of 22, this number has really not fluctuated a whole lot. It's pretty much stayed in that mid 90s area. And even in this latest survey, we still see it holding pretty steady. So, it's right around that neutral, which I think is good. Of course, it's, mental health better off, worse off, or about the same. It's all relative to where you start with. But the fact that we don't see big swings, even with some of the big swings in the other questions, I think is productive. Now, in this case, we then asked a follow-up question, which we never asked before, but I'm actually really glad that we did. Open-ended question, which is what do you do to maintain or improve your mental health through the production season? Now, I'm not going to show a bar chart here, but these were some of the more common responses that we got to this. So I'm paraphrasing here. A lot of comments around just taking time away from the farm, sort of taking myself out of that situation, going out, doing other things, right? Could be visiting with friends, going out and talking to other people, socializing, right? A lot of this staying active and exercising. A lot of respondents commented on how the mental health piece is tied to the physical health piece, and if they're out exercising, it's a good release, and it's just a good way to, to keep the mind active in addition to the body. This one was very popular. A lot of focus on faith, and there was reference to praying and Bible studies, things like that. Also meditation. Just the act of thinking positively. Reading is something else that people commented on, and finding ways to remain positive, which in some cases was staying out of the news, which I totally get. So in looking at this, and there's one more. There was a few, not a lot, but a few who made reference to the fact that they were talking to somebody, like seeking professional outside help, which I think is great if you need it and if you can access it. So, Shaun, this is what farmers are doing to help keep that number that we looked at earlier just sort of in and around that neutral spot, which is probably not an easy thing to do, to be
Yeah.
honest.
Well, especially given how the market's bounced around, like we've been talking about, and very very thoughtful comments
Yeah.
from people that completed the survey. Really do appreciate it. And I think, if you were to come up with, hey, give me the top 8 things that you should be doing to, stabilize, keep yourself on an even keel, pretty good list, to be honest with you. And I think it's important, in our Mind Your Farm Business podcast, we've done a number of different episodes on, on mental health. And one of the misconceptions is on the taking time away from the farm, it doesn't need to be like a 2-3 week thing. It can be, if you can afford the time, a day. A day would is like, start there. Maybe even a half day if you need to. But you don't need to go for gold. Just a little bit of time can make a big difference. And I read a book where the title escapes me. It was all about to do with happiness, and the last one I'll point out is the visiting with friends. Okay, having people that you can talk to. They could be other farmers. They could be people that have nothing to do with agriculture. They're just people you trust and you can share experiences with, good or bad. You only need 3, according to the longest standing behavioral Harvard study on happiness. They basically said you need 3 key friends. So keep that in mind, and really appreciate everybody providing these answers.
So I echo those thoughts too. And thank you for opening up and sharing, how you feel about these things, all of these things. It is very important, and it's fascinating when you start dipping into the numbers and pulling together the analysis that we are so happy to be able to share back with you in this way as a respondent. So please keep answering the surveys. We understand that it takes, a few minutes out of your day, but the insights that you're providing, I think, are adding just a lot of value to those of us in the ag industry and outside of the industry as well. We hope that by doing this, we can help others who don't know farming better understand what's going on at the farm gate level. Um,
Absolutely.
one thing, Sean, just want to reference. We also asked some questions on cybersecurity. That's coming. We just haven't pulled together. We wanted to really focus on this and not deviate to the cybersecurity stuff. But you would have led off the survey by answering some questions on that. So we have more coming a little bit later. So stay tuned.
Absolutely. Hey, everybody, I really appreciate you completing this month's survey on the Canadian Farmer Sentiment Index. Really do appreciate it. If you want to, we're going to be publishing a number of different components of this, kind of diving into some of the data, showing some of those relationship things that we discussed here in this video over the coming weeks at realagriculture.com. You can find all that content summarized as well at RealAgristudies.com. Now, if you have any feedback, thoughts, comments, that's you completed the survey. Now you heard our analysis. It's going to draw up some other thoughts, some yeah buts, some what about this. I agree with that. I disagree with this. Those kinds of things. Keep it coming. You can send me an email, shaney@realagriculture.com. Hey, Justin, this has been a lot of fun. Thanks a lot.
Thank you, Sean. Take care, everybody.
Hey, everybody. Good luck with harvest and stay safe out there. We'll talk to you again later.